Good morning, everybody. This is Michael coming to you from GammaEdge with our morning strategy and briefing session on Thursday, October 31st. Happy Halloween as we head into this day. Start with the three structures here, or three pillars here at GammaEdge that we usually start with: sentiment, structure, and trend. We'll start with trend. MTM model continues down. We spoke about this yesterday in the pre-market session. If you go back and review that, I said that we'd be looking for either this CT to continue higher, bolded white CT line above the moving averages, or we would look for a failure. Once we're expanding below the colored ribbon, we're always prone to failure much quicker. I talked about that yesterday, and we had that happen pretty quickly, pretty rapidly in the morning, even with the bounce up to 58 to 50, pulled back down, and then we just started to see the selling continue and came in and then continued the rest of the evening or afternoon. So again, I want everybody to make sure you're reviewing the SPX or the market trend model every morning, right? This is basically where the center of your whole trading plan should start. We've back tested this. We have all the tag combos. It's just the center point of being on the right side of the market. If you can be on the right side of the market, that's 50% of the battle, maybe probably 75% of the battle. So just review this every morning. Go back to the GammaEdge framework, review the tag combos, understand what this is telling you. This is basically telling you that sellers have been in control for a significant amount of time in the market. Even though we bounced up, the selling just continues to come in on every bounce. So that's why we always say when the colored ribbon is red below cyan, the CT bolded white line, which is our instantaneous, and then the moving averages 1 to 3 days are down, all rallies can be sold until that changes, until we see this bolded CT recover significantly. Rallies can be sold, and we continue with that statement even into today. Could we see a bounce from 57.50, 57.75? Absolutely, but we'll continue to sell the rallies until we see the MTM trend model change. So just make sure everybody's reviewing this. This really is the cornerstone or center point of how you should start your trading plan. So on to next, SPX full game plan, or SPX full complex, sorry, put dominated now. Above and below spot price. Spot price going to open significantly lower than transition. Transition's very narrow, unambiguous. So any rally back up towards 58.20 or even 58.40, we would look to short that rally as long as the MTM is in confluence with what's happening with the overall structure and sentiment. Obviously, 58.35 JPM strike. The further we are away from that, the less influential it'll be throughout the day. So if we continue to stay under 5,800, 35, 40 points away from that JPM mark, it's going to be kind of inconsequential and really not influential. If we get above 5,800 and start moving up towards that direction, then yes, that could come into play, and we could end up, moving up towards that 58.35. But right now we're in pretty heavy put dominated territory. Moneyness matters at the open. There'll be a lot of fear and greed, a lot of emotion, a lot of volatility. You see this expected move has expanded to 1.24 compared to 0.6, 0.7 yesterday. So our expected move is expanded substantially. So volatility increases, put dominated. Obviously, we'll see how that plays out, but I'd anticipate some significant volatility at the open. Obviously, I talked about this before. People open their brokerage accounts. At night, they figure out, oh, I lost money. I'm going to put market on open orders to sell, and then we'll see how it all balances out. We do have a pretty large amount of in-the-money calls coming in at 57.50. If we stay above that level, that's kind of where I've drawn a TA level. Previous place I spoke about yesterday where we're pretty much range bound. If we get below 57.50, then I would anticipate quite a bit more weakness coming in, probably pretty rapidly, maybe down towards 57.25. And then ultimately 5,700 would be that round Livermore number to the downside. Delta balance history, we continue to weaken day over day. Just look here as previous days. We've lost the weak bear. Now we're in the full bear on the right-hand plane. OTM speculation continues to drop, and we've actually lost a strong bull in the left-hand plane. We're still bullish. We still have in the money calls below us, depending on where we open. But that overall continues to weaken. Bullish yesterday on the delta balance. Now we're weak bull, even though we're still in that so-called bullish look. From the delta balance history, great question Michael asked this morning. This doesn't take into account the gap down that we're going to see at the open. So this was obviously from last night's historical data. GEX ratio continues to drop towards 1. And now we're finally seeing that confluence of the GEX ratio continue to drop, short dated calls continue to erode, and now we're going to get a gap down in price. And so usually one or the other plays out. We see a drop in GEX ratio, sideways in price, and then the GEX ratio recovers, or we see a drop in GEX ratio, and then at some point price ends up confluencing with the GEX ratio, and we see a pullback in price, which is what we're going to see at the open here. Just when we're seeing those divergences, it doesn't necessarily mean that it's a trading trigger. It just means take notice, right? So SPY looks a little bit stronger for today and tomorrow compared to the SPX. Delta balance rebounds a little bit for Friday, but then extremely weak for Monday and Tuesday of next week. GEX ratio continues to drop in the SPY, so obviously those short-dated calls, which is your numerator, continues to erode. Puts continue to grow, which is your denominator, dropping that ratio. So we'll continue to watch that. Qs continue to weaken. Today looks extremely weak. Again, we'll have to watch and see what happens. This is data from last night. But strong bear on the delta balance, right-hand plane, strong bear, completely erosion of the OTM calls in the money put speculation. In the left-hand plane, we've lost those in the money calls. Now we have a few OTM puts coming in. So anticipation on Qs that we will see a little bit weaker. And then Friday rebounds, and then a little bit weaker into Monday and Tuesday of next week. 0 DTE put dominated above below spot price, transition unambiguous 58.20 to 58.35, or yeah, 58.20 to 58.35. We've drawn the drunken sailor range in there. 57.75, obviously an implied opening net stack command. Large levels at 5800. We'll run the net stack command after the open, kind of see where we're at. Obviously, the inversion in the PGEX and INGEX is extremely important also. But again, any move up at the moment, we'll look to sell rallies like we've talked about the past few days. Obviously 58.20, and then we have 58.35, which is the JPM hedge. So for me, any bounce this morning from 57.75 up towards 5800, most likely I will look to short. Depending on what the vol-am looks like. If we lose 57.75, I've drawn that. It's a pretty important TA level. I'd look for a move down towards 57.50, and that would be an area I'd look for stalling or a price reaction. +1 DTE, call dominated as of now. I have a feeling that will most likely change unless we see a significant rebound today. And then obviously we have a significant amount of expiry today and tomorrow, 35% or so of the SPX coming off today and tomorrow. Today is the end of the month also, just remember that. And then obviously we'll start into November, heading into the end of the week. So again, we'll just see how all this plays out. But gapping down into extreme put dominated territory sets your stage for a weak look right at the open. So we'll go for our if-thens today. Implied open right now is 57.78. I'll go ahead and switch to the SPX here. So I've drawn my drunken sailor range, 58.20 to 58.35. Obviously JPM there. 0 GEX in trans, negative GEX from last night's run. On our trading view scripts, COTMP at 58.10. Looks like we're going to open at 57.75-ish. So anything below, we're going to open somewhere around 57.75. So I'll be watching this 57.60. 57.50 level for an important area for a bounce or stalling. If we do get a rebound off here, I'm not looking to go long. I would look for a price to move up towards this direction, look for some stalling and opportunity to short versus 5800. If we do retake 5800, then obviously we could get pulled up towards that 5820, the bottom of the drunken sailor range. But again, I will continue to look to short any rallies back up towards 5800, 5820, 5835. Depending on what the vol-am looks like in the targeting, as well as the MTM. Really, I'm not looking to go long anything at all, just with a lot of the EPS we still have coming out, and then obviously end of the month, and then news, noise, election into next Tuesday. I'm not willing to position myself. Most likely, I may not even be doing any day trades. I've kind of just been in capital preservation mode, except for one trade, I think, on Tuesday. but capital preservation mode until all this stuff kind of plays out and we get a certainty in the market direction. So that's basically how I'm looking at it. Single stock names, not really even looking at those. I'm doing my homework, but not going to take any trades. P2P obviously is off there. So that's my thesis for today. If you're day trading, increased expected move, increased volatility, put dominated environment. It's probably going to be pretty volatile, pretty noisy, back and forth. So if you're new to this, zero DT trading is not advisable today at all, zero. So if you just want to not do any trades, that would be advantageous. If you have to trade something, make sure you're trading around the key gamma delta levels. Understanding where those large levels are, where the most likely anticipation is where price action will act or react, and do not trade in between the major levels because it'll just be chop action back and forth. Again, smaller time frame, smaller position size, manage risk as much as you can. So, all right, that's all I have for this morning. We'll be in the Discord in just a few minutes. Make sure you check out the SPX game plan, single stock game plan, and the MTM market model to get your trading plan ready, and then post in your pre-market channel that you've done your morning trading plan. So, all right, let's make it a great day, everybody. See you in just a few minutes. Thanks.